Hello, in this video I'm going to solve a practical example demonstrating how to incorporate leases under IFRS 16 into the statement of cash flows under IAS 7. I am Sylvia, the founder of cpdbox.com, the place to be if you want to learn and understand IFRS easily and have better skills and accounting insights. So you're very welcome to check out cpdbox.com, subscribe to our free newsletter, learn with me and stay updated. So let's focus on the example and read a question. On 1st January 2004, ABC entered into the lease contract. The details are as follows. Initial right-of-use asset equals to 20,000 CU. Thereof, the present value of the lease liability is 17,000, and initial direct costs paid in cash are 3,000. During 2004, ABC paid the lease payments in total amount of 3,700. Thereof, the repayment of the lease liability was 3,209. And the payment of the related interest was 491 CU. In 2004, amortization of right-of-use asset was 4,000 CU. This transaction has been incorporated in the financial statements as shown below, and we are seeing the statement of financial position as at the end of 2004 and 2003. And a statement of profit loss and other comprehensive income for the year 2004. And your task is to prepare the statement of cash flows for the year ended 31st December 2004. To prevent any misunderstanding, CU simply means currency unit instead of mentioning euro, US dollar, Japanese yen, so what have you. And before we actually start working on the statement of cash flows, let me draw your attention to a few items in these financial statements. The right-of-use asset as at 31st December 2004 amounts to 16,000 currency units in the statement of financial position. And that's logical because the initial right-of-use asset was 20,000 less amortization of ROU asset in 2004 of 4,000. So you can see the amortization of right-of-use asset of 4,000 currency unit in the statement of profit or loss and other comprehensive income too. It's here. The lease liability as of 31st December 2004 amounts to 13,791 CU in the statement of financial position. And that is the initial lease liability of 17,000 less its repayment in 2004 amounting to 3,209. And the interest expense for the years 2004 of 1,491 currency unit includes the amount of interest paid on the lease liabilities of 491 currency units. Now, before I start with actual steps of making this particular statement of cash flows, let me point you to one of my articles on my website, and I described all the steps with lots of details there. So I always use this method of preparing statement of cash flows because it's simple, logical, easy to follow, and always gives good results. So if you're unsure how to do that, I sincerely recommend reading the article first. And there is also a 14-minute video in the end of it with basic explanations of making statement of cash flows. And the link to this article is in the description below this video. So from now on, I'm going to follow the exact same steps and logic. So I will be focusing on the lease part, not on the explanation of the steps in making cash flow statements themselves. So step number 1 is to calculate balance sheet changes, or better said, changes in the financial position. Here you will simply calculate the difference between the opening balance and the closing balance of each individual line item in the statement of financial position. Just to warn you, please do not mess up with signs. I always use plus for assets and minus for equity and liabilities. And please always calculate opening balance less closing balance, not vice versa. And of course, do not include subtotals of the line items. Just use the line items themselves, right? Step number 2 is to classify each of these numbers to the appropriate part of the statement of cash flows. So either to operating, financing, investing part, or to the final reconciliation. So how to do that? You should firstly take the blank statement of cash flows with no numbers. Now, you go and classify each change into the correct place within that blank statement, one by one, except for cash and cash equivalents, and we will deal with them in the end. So for example, the change in property, plant and equipment affects the investing part. It's here. Change in the receivables affects the operating part, and you should choose appropriate line items in the statement of cash flows. Again, I will point you to the article linked below that focuses more on basics, or you should check out my premium courses on my website that will teach you these things in detail very practically. So let me finish this. Now, let's deal with cash. Put the opening balance, that's of 20x3, of cash and cash equivalents, to the line cash and cash equivalents at the beginning of the period, and put the closing balance of cash and cash equivalents as of 20x4 to the line cash and cash equivalents at the end of the period, because that's the point of making the statement of cash flows, to explain the change between these two numbers. And make the check. So sum of all changes without subtotals should give you the difference between the last two lines of your cash flow statement. Okay, that fits. Now, I will make a few remarks related to the leases. Change in right-of-use asset of minus 16 currency units was classified into the cash flows from investing activities. And since this is a minus, that points to cash paid, not received. And I labeled it as acquisition of ROU asset. And before you start making a point that ABC did not pay 16,000 for the acquisition of ROU asset, hang on a minute. We have not finished yet. Change in the lease liabilities of 13,791 was classified into the cash flows from financing activities. And since this is a plus, it means that the cash was received, not paid. Again, if it makes no sense at this stage, that's okay. It will at the end. So let's move on. The step number 3 is to deal with non-cash items. And this is the crucial part to understand and get it right, especially in the case of leases under IFRS 16, because taking a lease is a non-cash item at the initial recognition. So here, let's take a look at the statement of profit or loss and other comprehensive income first, and mark all obvious non-cash items. And those will be depreciation, amortization, interest expense, and income tax expense. So before we actually start working on adjustments for non-cash items, here are a few tips. Make each adjustment in a separate column, like I have pre-made columns here for you. And making adjustment means adding a number to a certain line item and deducting it from the other one. So the total is always 0, right? So you will see that in a second. In this example, let's do just a few adjustments, namely the one for tax expense, which is universal, crucial adjustment for all statements of cash flows. And then we will do some obvious necessary things like interest expense, depreciation, and then all adjustments related to the leases only. And we will pretend that there are no other adjustments to keep that simple. Let's tackle taxes first. You can see that currently your cash flow statement starts with profit before tax, but in fact there is a balance of 6,009 currency units, which is profit after tax. So just look here. The profit or loss statement. And therefore, we add back the tax expense of 2,500 to the first line and deduct it from the line income taxes paid. If there were some unsettled income tax liabilities or deferred taxes, assets liabilities, then you should adjust them as well. But again, we are keeping it simple here. You can always take a look in our courses or website where you will learn all the details. Next, interest expense. Interest expense always adjusts non-cash items in the operating part, and therefore we add its amount of 1,491 accordingly to the line adjustments for interest expense. The standard IAS 7 requires presenting interest paid either in the operating part or in the financing part. Well, if you work for a bank or other financial institution, then you do not have this dilemma because it is clearly the operating part in most cases. Let me also bring your attention to the requirement of paragraph 50 of the standard IFRS 16. It requires that you shall classify the cash payments for the interest portion of the lease liability separately in the statement of cash flows. And therefore, I split the total interest paid into two parts. Cash payments for the interest portion of the lease liabilities of minus 491 and interest paid on the long-term borrowings not related to leases of minus 1,000 currency units. As you can see below, I decided to classify the interest paid in the financing part rather than operating one, although you have a choice. Let's deal with depreciation. This is clearly non-cash item included in your profit, so you need to add it back in the line adjustments for depreciation and amortization in the operating part. Then you should deduct it from the same line item in which you reported the change in financial position related to property, plant and equipment in the investing part. Next, amortization of right-of-use asset. Again, this adjustment is of a very similar character as depreciation. So you need to add the amount of 4,000 currency units back in the adjustments for depreciation and amortization in the operating part. And then you deduct it in the same line in which you classify the change in right-of-use asset, acquisition of PPE, ROU asset. Now we are getting to another non-cash item which is not obvious so much from the statement of profit or loss and other comprehensive income, but you should keep it in mind when dealing with leases. Acquisition of assets under the leases is non-cash item initially because no cash moves, well, apart from these initial direct costs, and therefore we need to adjust it. So, the initial change of right-of-use asset amounted to 20,000 currency units prior amortization, but ABC paid only 3,000 for the initial cost, and the rest of it was new lease liabilities that are also non-cash item. And therefore, we need to cancel these two non-cash items. So you need to add back the non-cash amount of acquiring new right-of-use asset of 17,000 currency units and deduct the non-cash amount of acquiring new lease liabilities of minus 17,000 currency units. And that's it. We're done with non-cash items for leases. And at this stage, we are almost done. Just add up all the columns line by line to get the actual statement of cash flows. So for example, take a look at the line profit before taxation. You need to add up all the numbers from all the columns in that line. So in this case, 6,009 currency units plus 2,500, which is 8,509. Exactly as profit before tax from your statement of profit or loss and other comprehensive income. So now let me do the rest. On top of that, it would be nice to add subtotals to show totals for individual parts of statement of cash flows clearly. All right, done. Let's take a look at some final numbers related to leases in the statement of cash flows to see if they make sense. So let's see the line acquisition of property, plant and equipment, right-of-use asset. The final statement of cash flows shows the amount of 3,000 currency units. This is okay because ABC paid 3,000 for initial direct costs related to the lease. And the remaining part of right-of-use asset was financed by the lease itself, so no cash. Payments of lease liabilities. The statement shows the amount of 3,209. And this is okay because ABC repaid 3,700 currency units within the lease payments, but they're off 3,209 for the reduction of the lease liability. So we can take a look here. Cash payments for the interest portion of lease liabilities. The statement shows the amount of 491 presented separately from other types of interest paid, and this amount corresponds with the numbers in the question above. So when you're preparing complex statement of cash flows, I also recommend verifying the movement of certain balance sheet items. I'm not going to do that here in this video as the movements are simple and clear enough from the statement itself. But if interested, check out my website for more examples, videos, and advanced courses. So that's it. Thank you for sticking until the end. I really hope you like this video. So if you do, give us a like button and share it with your friends. Make sure to check out our website if you would like to progress with your knowledge or you need some help. Thank you. Bye.